Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of corporate filings for you. Today we are diving deep into the world of investment funds, specifically Fidelity Advisor Series, the VIII's latest N-CSR filing. Get ready for a financial deep dive that might just surprise you. This is a big one, folks, a certified shareholder report packed with numbers that tell the story of how these funds have been doing over this past year, ending the 31st of October 2025. We are not going to get bogged down in every single detail, but we will focus on what truly matters to you as an investor or even someone just curious about the financial markets. Let us first look at the performance of the Fidelity Advisor Overseas Fund Class Zs. It saw costs of $72 on a hypothetical $10,000 investment, a 0.66% cost, which is pretty standard. Internationally, equities, specifically the MSCI ACWI ex-USA index, performed strongly, rising amid attractive valuations compared to US stocks, a weakening US dollar, and good economic growth in some areas. This sounds like a good market climate for overseas investments. However, as always in investing, there are ups and downs. Kicks in Europe ex-United Kingdom and an allocation to the United States actually detracted from the fund's performance. On the sector side, security selection, especially within financials, hurt the result. Also, stock picks in industrials and consumer discretionary dragged it down. The biggest drag on performance was Marsh McLennan, a significant investment that dropped 17%. There was also an overweight in IMCD Group, a company that fell 34%, and they have reduced their investment there. Not owning SoftBank Group, which gained a massive 183%, was another significant detractor. This shows how missing out on big winners can really impact a fund's relative performance no matter how good other picks are. On the flip side, security selection in Japan and an underweight in Asia Pacific ex-Japan did contribute positively. The biggest sector contributor was consumer staples, with an underweight helping boost performance. Industrials and an underweight in healthcare also boosted the fund's relative performance. The star performer for the fund was an overweight in Rolls-Royce Holdings, a hefty gain of 124%. This stock was one of their largest holdings, a good bet there. Mitsubishi Heavy Industries also performed well with a 115% gain. Though holdings were reduced, Advantest, a new position this period, gained 163% and also helped the result. Now let us look at the cumulative performance of Class C. An initial investment of $10,000 in 2017 grew to $12,337 by the end of 2025, a respectable return. The MSCI EAFE index, a benchmark for this type of investment, grew from $10,000 to $18,628 in the same period. So the fund did underperform its benchmark over the long term, but it is still positive growth. The fund size is over $465 million with 87 holdings. This indicates a diversified portfolio, though the number of holdings seems a bit low for such a large fund. Let us quickly check out the market sectors. Industrials and financials make up over half the portfolio at 27.5% and 27.2% respectively. Information technology is also a significant chunk at 12.8%. This is a fairly conventional investment strategy for an international fund. Geographically, Japan leads the pack at 17.3%, followed by the United Kingdom at 15.3% and the United States at 14.7%. This distribution of investments across different countries is what gives an international fund its diversification. The top holdings are Hitachi Ltd at 3.2%, Banco Santander SA at 2.8%, and Safran SA at 2.7%. These are consistent with the sector breakdown and show a focus on large established companies. Now moving on to Fidelity Advisor Overseas Fund Class M. The cost for a $10,000 investment here was $140 or 1.29%. This is higher than Class Z, suggesting that different share classes come with different fee structures, which is typical. The fund performance analysis is identical to Class Z, which makes sense as they likely share the same underlying investment strategy. The cumulative performance for Class M shows an initial $10,000 investment in 2015, valued at $19,287 by 2025. This is a solid 10-year return. Let us check the key fund statistics for both Class M and Class I for Fidelity Advisor International Capital Appreciation Fund. Total advisory fee is over $94 million. That is a huge number, indicating a very large fund. The portfolio turnover rate is 96% for Class M and 96% for Class I. A high turnover rate like this usually means the fund managers are actively buying and selling securities, trying to capitalize on short-term market movements. This can be good, but also incurs higher trading costs. The fund size for Fidelity Advisor International Capital Appreciation Fund is an impressive $16 billion. That is a lot of money managed. The market sectors for this fund are quite different. Industrials are the largest at 32.6%, followed by financials at 23.6% and information technology at 16%. This is a more growth-oriented sector allocation compared to the overseas fund, and makes sense for a fund with a name like International Capital Appreciation. Geographically, the United States is the largest holding at 23.6%, followed by Germany at 11.4% and the United Kingdom at 9.4%. This indicates a significant allocation to developed markets with a healthy exposure to emerging market players as well, such as India at 9%. The top holdings are Taiwan Semiconductor Manufacturing Co. Ltd. at 5.7%, Tencent Holdings Ltd. at 3.4%, and Hitachi Ltd. at 2.6%. This shows a clear focus on technology and major international companies. Now, for your regular dose of insights from Corporate Decoder, a merger happened the 25th of July 2025. Fidelity International Capital Appreciation Fund merged into Fidelity Advisor International Capital Appreciation Fund. This is a common strategy to streamline operations and potentially reduce costs for shareholders. We will see if this leads to any notable changes in performance or fees in the future. Let us zoom into the risks mentioned in this filing. International equities are sensitive to global economic conditions, currency fluctuations, and political instability. Emerging markets especially are known for their volatility, which is something to keep in mind. The strategy of the fund is to achieve capital growth by investing in companies in emerging and developed markets outside of the US. This is clearly reflected in their top holdings and sector allocation. From a leadership perspective, it is important to note that the Board of Trustees holds a lot of power in fund decisions, including approving advisory contracts. They meet regularly to review performance and ensure fair compensation. This filing confirms that the advisory contracts were renewed through May 2026, indicating confidence in the current management. Lastly, let us look at the independent auditor's report. PricewaterhouseCoopers LLP and Deloitte Touche Amp. Touch LLP reviewed these financial statements. Their opinion is that the statements present fairly in all material respects the financial position and performance. This is a standard clean audit report, which is what investors look for. So, what is the story here? These Fidelity funds operate in a complex global market. While some funds like the Overseas Fund showed solid long-term growth, others like the Focused Emerging Markets Fund experienced their ups and downs. The International Capital Appreciation Fund's merger is a strategic move that could benefit investors down the line. Diversification across geographies and sectors remains key, but risks associated with emerging markets and specific company performance are ever present. The company is actively managing its portfolio with a high turnover rate in some funds, indicating a proactive approach to market conditions. The extensive notes to financial statements show a commitment to transparency and adherence to regulations. It is important as an investor to understand the specific fees and risks associated with each share class. What are your thoughts on these Fidelity funds and their performance? Let me know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more corporate decoding. We also have a Discord community linked in the description, so join the conversation there. Thanks for watching, and until next time, stay smart and stay invested.